Holy smokes, everyone. Boy, are things getting crazy in the markets. And I'm starting to see a big shift in investor sentiment. Normally what would happen after a big sell-off that we had the other day of the NASDAQ falling over 3%, we would immediately rebound the next day by at least 1 or 2% because you had to buy the dip, baby. Here we go. Come on, push it.
Buy the dip. Buy the dip.
But unfortunately, it's looking like this dip may keep dipping, or this dip may turn into a rip. Now in this video, I've got some huge news and some huge data for you to show you this is not clickbait, that there is a massive meltdown going on right now and 40% of stocks have crashed 50% or more. I'm also going to go over what the global...
That's true. Most people don't know that what all the gains basically in the past year were mainly on the large mega caps, specifically the large tech stocks. The broader market, if you follow the Russell 2000, all those smaller and mid cap stocks, man, they've been hammered. So this is now becoming more wide knowledge that these other smaller companies, which really give you a more clear picture of the economy, are hurting and hurting bad.
Elites, the 1%, the hedge fund billionaires are doing in the markets right now, because we have some new alarming information. So everyone, this is going to be a good one. Let's not waste any time. Let's get straight into it. Look at this, everyone.
Yeah, and this guy, if you guys don't know, he's from Australia. Good day, mate. And I watch him quite often. He provides good information. So I'm going to link his info down below.
Massive meltdown. 40% of NASDAQ companies are down more than half from their highs. In a testament to the narrow breadth of the NASDAQ, the broader market in general, where, as a reminder, 51% of all market gains from April through to December were from just 5 of the most popular.
Okay, I started a little bit too soon, but this is absolutely crazy. If you did not know this before, right now you're learning something just absolutely mind-blowing. Can you believe that 50% of the gains, were from just those like 4 or 5 companies? That is just freaking wild. And that means if these top companies start to hemorrhage, start to get hurt, guess what's going to happen to the overall market? This is the market. If these start going down, man, it's going to be a crash that we have not seen since, I would say, the dot-com bubble.
Tech names, that is Apple, Microsoft, Nvidia, Tesla, and Google. This is what I've been talking about, everyone. We're seeing a crash in the market, but it's only the few mega corporations, the tech stocks, they are the last defense that are keeping these indexes up. And like I did
absolutely the last defense. So many of the options, so many of the hedge funds, so many of the funds out there, the mutual funds, are invested heavily in these like 5 stocks, right? If they start going down, we're gonna see a ripple effect that you haven't seen again since 2000. The thing about it is, with this crash, it's not even a crash right now, guys. If anyone remembers the dot-com bubble, which I clearly do, you'll see there will be a crash, but it will be drawn out. It's not going to be freaking 50 or 80% right away. This crash could be starting right now. Actually, it started, I would say, a couple months ago when the market started turning over. But now it's starting to get much more attention and much more traction, and people start fearing more. This could be the starting point of a much longer protracted downturn, which could last 1, 2, or even 3 years.
Video previously, not just in the NASDAQ, but also in the S&P 500, over 300 companies are already in a bear market with a 20% decline or more. Sundial Research notes that a near record number of tech stocks have plunged by some 50%, a number that was only surpassed by the March 2021 crash and the global financial crisis. Now this is crazy, everyone, and what we're really heading to is a few mega companies that control everything. Monopoly over many different industries. Whatever the fundamental and macro considerations, there is no doubt that investors have been selling first and trying to figure out the best result later. So what this simply means...
The big, also in the news, you see these big guys, big billionaires and tech billionaires and, hedge fund billionaires, they've been selling. They've been warning. They've been spreading the news that they're going to do amongst themselves. And even of course Elon Musk. And if you have any if you've done any research, you'll see that there's been more insider selling this past few months than ever. So they know something that we don't, because they actually know their business and they can see the market turning. They can see the numbers changing. They can see the writing on the wall with all these negative macro indicators. And again, they have inside information. They know what's going on, and they have been selling.
Means is the stock market is already crashing. We already are seeing a big crash. But the FANG stocks, or the top 10 companies in the S&P 500, are the last defense. But once they fall, that's when we'll start to see the indexes really plummet. But it's not only...
Right now, I've been telling people for a while, when there's a risk, right now there's risk on, okay? Risk off environment. It's been risk off for a while now. So when you see this type of risk off environment where there's so much instability, so much craziness going in the market, it's perfectly fine to sell portion, if not all of your stocks. And don't be afraid to lose some of the upside. When there's uncertainty in the market, you can step back and pause and just watch and just wait. You're not going to miss out. If you're an investor, if you want to be a serious investor, you're thinking about long-term investing, right? So even though, you might miss a little bit of here or there, it's perfectly fine, because the most important thing is you don't want to lose money. You don't want to lose that nest egg. You don't want to lose that nut right now. And right now people have been buying the dip all the way down. Like for example, like Bitcoin, they've been buying all the way down and they're getting freaking decimated. Okay?
Only this what's happening, everyone. Let's have a look to see what the insiders, the hedge funds, just did. Look at this, everyone. Hedge funds are selling tech shares at their fastest pace in a decade as rates spike.
Okay, we're watching this thing together, and I just mentioned hedge funds, top guys, all the big guys, they've been selling. They've been taking profit because they know, okay? So this is what's happening. If you see them selling, why wouldn't you take some risk off the market and sell some of this stuff? I don't get it.
So you're starting to get the message here, people. This sell-off isn't over, and it's only going to get worse once the Federal Reserve starts lifting interest rates. Now, the reason why I think...
And that's pretty much a guarantee, okay? Now, I was not a big believer in inflation. I thought it was transitory, and it still possibly can be, but all the numbers there, I think they're basically there. I've witnessed it. I've seen inflation on in my daily life, and as a business person, I've seen it through the business world as well. Not only that, real estate and all that. So there's definitely inflation, and now the Fed sounds like they're really stepping up and they want to be more aggressive. And when that happens, what's going to happen? Of course, stocks specifically, these large multiple tech stocks are going to be hammered. So it's already it's basically they're telling you what's going to happen. So don't be like a deer in the headlight going, you know what I mean? You have to make some moves to protect yourself.
It'll get worse is because a lot of people think the Federal Reserve is actually bluffing, and what they think they're doing is something called forward guidance, where the Federal Reserve tells the market what it's going to do, so that way they don't actually have to do it. So what the Federal Reserve may be thinking is saying, okay, look, we know inflation's out of control, so we'll lift interest rates. Now, by saying that, people may think, oh, they're going to lift interest rates, the economy's going to crash, so then people stop spending, and then that reduces inflation. So I think that's what they're hoping is going to happen.
It's not going to happen.
But I don't think it will. The hedge fund community dumped tech stocks in the 4 sessions between December 30th and Tuesday as interest rates spiked.
Let's, again, understand that people in the know, people who are considered smart money, what they're doing. And when smart money does something, you have to pay attention. You have to freaking take off your freaking googly-eyed, love of all the tech and the big names and all that, and look at reality. Look what they're doing. At least pause and think that you might be wrong in your assumption that things are going to just keep on going up forever. When there is a downturn, like what's happening right now, look at what the smart money is doing, and the smart money is selling.
The 4-session tech unloading marked the biggest sale in dollar terms in more than 10 years.
Damn!
Reaching a record since Goldman Sachs Prime Brokerage started tracking the data. So just to re-emphasize, this is the biggest sell-off since Goldman Sachs record data began. And the reason tech stocks are being crushed and why this may flow into the S&P 500 is because borrowing costs going up have a hindrance on growth companies because they rely on cheap funding to grow. But once interest rates start going up, those funding costs go up and it makes it harder for these companies to grow. And it also makes their future cash flows less valuable. So with valuation so high and looking like profit margins are going to fall, the market is now pricing this in.
So these growth stocks, these growth stock, these big tech, their multiples are just absolutely freaking, insane. Okay, these stocks are very, very expensive unless you have a market. Very, oh man, what's that word? Very conducive to continued growth, right? To continue growth. And that's low interest rates. And that's going to stop. Low interest rates going to stop. Fed, purchases are going to stop. Their balance sheet's going to reduce. They're going to reduce some things on the balance sheet. All this is happening. So because these growth stocks, the high multiple stocks, are so sensitive, when you have 1, 2, 3, 4 pieces of really, really bad news, they're going to be affected. And that's going to trigger, a ripple effect beyond the tech stocks and into the broader market, which is the S&P 500.
Goldman noted that hedge fund selling of tech stocks is driven almost entirely by long sales, in contrast to mainly short sales seen in the last 2 months of 2021. The selling was driven by software and semiconductor stocks, the Wall Street firm said. Now, also CNBC did a survey to see what was investors' biggest fear and what they think is the biggest risk for markets right now. And it was this, everyone. Investors fear inflation the most in 2022 and see lower stock market returns, CNBC survey shows. And we can see here, besides inflation, the second biggest risk was the Fed raising rates at the wrong time. So
did you just see that? everything here is happening. Inflation is happening. Fed will raise rates, and at wrong time or not, they're going to just raise rates. Whenever they do raise rates, it's considered a wrong time in the market. And COVID, we already know what's happening with that. And there's a new IHU variant, and it's more crazier than the Omicron. It's just going to come one after another. So all the fears that people worried about in 2022, it's going to happen. And when you have that fear, when you have these things that are really going to happen, it's gonna definitely impact the stock market, crypto, everything in a very negative way.
Raising rates at the wrong time. So we got the majority of stocks in bear markets or down over 50% in the NASDAQ now. We've got hedge funds selling. Now we've got the Federal Reserve with a triple threat of raising interest rates, no longer buying bonds, and also going to start selling off their
balance sheet
worth nearly $9 trillion.
$9 trillion.
The Federal Reserve has said they'll lift interest rates 3 times in 2021.
I think 4.
But the question I don't think anyone is asking is, what if it doesn't work? What if inflation doesn't go down?
Armageddon.
We have a repeat of the 1970s and 1980s when they have to jack interest rates up to 15 to 20%. Now, I don't think anybody wants to think of that scenario because that would be absolutely catastrophic. We would see the biggest wave of defaults we've ever seen. We will see the biggest wave of bankruptcies. People will default on all their loans.
Not only here, worldwide. If America has to deal with this this inflation for a longer term, and I'm not even talking about freaking 15%, which again I experienced. But even if it stays at 7%, 8%, touching 10%, man, this economy and the world economy is going to be freaking devastated. So there is a possibility of this happening if we don't see inflation being tamed. So hopefully all this, with the carnage that the Fed is going to be putting in the market, if it doesn't work, hopefully it does work, but if it doesn't work, we have to be prepared starting right now for that type of world scenario. And if it doesn't, fine, we could act differently. But you have to have this in your mind because it definitely is possible because it happened before. It happened in my lifetime before. These type of interest rates, these 15% interest rate. Also, the collapse of 50 to 80% plus in the stock market, it happened in my life too. Okay, so these are cycles that repeat themselves over and over because human greed and human stupidity it never gets wiped out, right? And this is a new generation that never seen this type of pain before. They've never seen this type of carnage, so they don't even expect it. And right now, again, this is the beginning of something potentially catastrophic. Whew.
See real estate absolutely collapse by over 70% and the stock market collapse over 70%. So I don't think anybody wants to think about that scenario. But now it won't take interest rates going up to 15% for there to cause a big crash. Why? Because there's so much more debt and because people have been borrowing at 0% interest rates for such a long time.
This point is an awesome point, my man, my Mr. Kangaroo. Mr. Little Aussie, what's that, koala? I call him Mr. Koala. Anyways, he's talking about one of the differences, a huge difference from before, back in the 80s and 70s, is the amount of debt. Okay, so we have the government has absolutely freaking went nuts with the debt that they created. Like I believe $8 trillion of debt that they currently currently created during this pandemic. I could be wrong, but it's like that. The consumer debt, the corporate debt is absolutely freaking massive. Okay, if the interest rates rise and they have to pay interest on this amount of debt, it could crash the freaking, not only crash the economy, potentially, I don't believe I'm saying this, but could crash the government, okay? That's one scenario that's very unlikely, but can possibly happen if we have runaway inflation. I'm not even talking about hyperinflation. I'm just talking about runaway inflation. It could be freaking bone crushing for the government as well.
So if inflation doesn't go away and they have to lift interest rates just by 3 or 4%, well, this would be catastrophic for the market and we would see a huge sell-off in the stock.
Okay, just to go back on this again. Right now, basically, there is zero interest rates. So even a 2 or 3% interest rate, everyone's used to like no interest. These companies and governments are used to zero interest rates for a while now, for several years. If we're forced to go to 3, 4, 5%, man, that's considered like, basically for them it's like hyperinflation, okay? But that 4 or 5% is happening right now. So so these numbers, these numbers like 4 or 5% inflation is absolutely real. And if interest rates have to go to that level, man, it's going to be game over.
Market and in the housing market. Now, I'm not saying this is what's going to happen. I'm not predicting this at all. I'm saying this is just a scenario that I don't think anyone is talking about that may be a slight possibility. So everyone, I think we're about to see a lot of volatility in the markets. There may be a slight rebound in the markets today of, again, people thinking it's a great time to buy the dip. Things just don't go down in a straight line. But what I'm going to be looking out for is the latest CPI inflation data that should be released on January 16th. And I'll keep you updated on that. And it's going to be very interesting to see what the Federal Reserve says during its next meeting this month. And I'm sure the media are going to bombard him with questions and see if he folds under the pressure. So everyone, that was a quick update with what's going on in the markets, with what's going on with hedge funds. I thought this was very interesting. But what do you think about this? Let me know. Now,
thanks, brother. So listen, guys, like he said, when markets crash, they don't just go straight down in a line. When there's volatility like this, when there's this crazy unstable market, and when there's all this negative news coming out and negative behavior from the Fed, we need to step back and understand that this is going to play out over a period of time. The U.S. economy is freaking massive, right? You cannot turn the freaking Titanic in a blink of an eye. It takes time. So there's going to be volatility. There's going to be freaking bear traps or bull traps. Bull traps. So stay on your toes. Make sure you're getting the correct information and make sure you're calm. Even if you might be losing money, all this stuff is happening, be calm, be rational, and really start to investigate steps that you have to take to protect yourself. Because what if, again, inflation is going crazy, but what if really all this really comes to pass and the market crashes 50, 60, 70, 80%? What's your plan then? Guys, I hope you enjoyed this video. If you want more of these reaction videos, put them in the comments. Let me know what you think about my take on this video. I love you guys. Best of luck. See you soon.